Hey everyone, Ben here. In this video, I'm going to be discussing warrants. What exactly are warrants? How can they increase your returns in the stock market? What are the risks with warrants? And what do you need to know about them? I'm going to be discussing all that in this video. I've received many questions from you guys asking about warrants. And yes, they can be quite complicated. This video is really for the advanced stock market investor, those people who wish to take their stock market investing to that next level. I don't think you need to actually understand warrants and actually use warrants in order to be successful in the market. It's more of a little bonus tool in your toolbox which you can potentially use if you're interested in doing this kind of research and actually diving deeper into stocks and trading. So in this video, I'm going to dive straight in. Obviously, if you're watching this video, I'm assuming you're interested in warrants. There's a big headline here I want to sort of point out straight away, and that's the famous value investor Seth Klarman, and he recently purchased a lot of shares in Bill Ackman's SPAC. However, he actually purchased a lot of warrants in Bill Ackman's major SPAC, Pershing Square Tontine Holdings. So that's more of a public display of somebody purchasing these warrants. But before we dive right in, guys, if you're new around here, feel free to join the investing family by hitting that subscribe button, turning that notification bell on. If you do want to access exactly which stocks I'm buying, which stocks I'm selling, and my entire portfolio, and join a thriving community of some of the finest people on the internet, in this presentation which I've put together in this video, I'm going to be putting in the VIP group also for all you guys to download and actually read through and dive a little bit deeper if you're interested in warrant trading. So these videos don't really do that well on YouTube because it's very specific, it's very niche, so I would really appreciate it if you can give this video a big thumbs up, and also comment below your thoughts if you like these type of deep dive sort of technical option style videos. So firstly, what are warrants? Well, warrants are contracts that do allow for the purchase or sale of a stock at the strike price, so at a specified price. And the transaction must be completed prior to the expiration of a warrant. So if you understand options, you may think of this as very similar to an option, and it is similar, but with a few differences. So all warrants have expiration dates, although the expiration may be as far out as 15 years. So here are some examples of equity options. So we've got stock grants. So this is basically ownership of a stock. This is what you normally buy when you buy a stock in a company. Other equity options include stock options. So this could be a call option where you're betting the stock will increase in value, or a put option where you're betting the stock will decrease in value. So this is an option to buy or sell a company's stock at a specific price at a specific date from other investors, so somebody who's created these options contracts. But then you also have stock warrants, which is what I'm going to be discussing in this video. So this is an option to buy or sell the company's stock at a specific price, so similar to an option, at a specific date, so similar to an option. However, this is from the company and not from a third-party service. So why would we bother investing into warrants instead of just normal stocks? What are the advantages of investing into warrants? Well, warrants can basically give you leverage on your investment. So you can basically control a greater number of shares with a smaller amount of capital or invested funds. So this can magnify your gains in the stock market, but do be aware this can also magnify your potential losses, but they do seem a lot safer than normal options. So what about SPACs and warrants? Well, SPACs, for those that don't know, stand for Special Purpose Acquisition Company. This is basically like the new IPO. It's a faster way for private companies to go public, and almost all SPACs I've seen come with warrants also. So usually the ratio is for every one stock publicly traded, there's also one warrant. So it's a 1-to-1 ratio. So these warrants are listed on the New York Stock Exchange, NASDAQ, and also on the over-the-counter market, or the OTC. Now, there's no universal format for warrant listings. What you'll usually find is they have a W attached to the ticker symbol at the end. So just going over exactly what a warrant is again. So a warrant gives the holder the right to purchase a company's stock at a specific price, which is the strike price, and at a specific date. So usually this price X is $11.50 for most SPACs. That's the usual price. Of course, this will be confirmed by checking the SEC filing, which I'm going to dive into later in this video. But for some SPACs, it's more. For example, Pershing Square Tontine Holdings, Bill Ackman's SPAC, it's double this, as that SPAC is, I believe, the largest SPAC actually publicly available at the moment. How to find warrants, because many people ask me, Ben, where do I find these warrants? I don't seem to find them on my broker. Well, I've got a link here called NASDAQtrader.com. And basically this allows you to search for ticker symbols. So I'll leave a link for this in the description below. It's completely free for you to just search on there. So basically you type in the name of the SPAC. For example, here I've typed Romeo Power, which has the normal ticker symbol for the common stock RMO. And what you'll see will pop up is RMO.W. And remember, as I mentioned previously, the .W means this is the warrant. And it says here, Romeo Power Warrants. And they also have another symbol called RMO.WS or RMO Plus. So these are just alternative symbols for the Romeo Power. So once we've identified the warrant of the SPAC, then we need to have a strategy. We need to read the warrant terms. So really this is the part where you really need to do your homework on these, because every company is different, every SPAC is different. There are some general terms which I'm going to go over, but this is something you're really going to have to put in the time, concentrate on these warrants if you actually want to make any money on them. It's not as simple as just buying a normal stock. So firstly, we need to dive into the S1 filing with the SEC, or the Securities and Exchanges Commission. And every company which is going public will file an S1 filing with the SEC. So to find the S1 filing, simply search on Google the name of the SPAC and then S1 filing. Simple as that. And I've got a screenshot here to show you how to do that. Click on the S1 and then you'll dive into the Securities and Exchanges Commission website. And as you can see there, S1 form, IPO investment prospects. That's what we want. So we click into that form and you'll be brought up to a page like this. And then what you want to do is type in the search, press Control F if you're on Windows. And what you need to do is type in warrant. And that will bring up the relevant part of the S1 filing, or you can look in the contents in order to give you the terms of that warrant. So here it says the price per share is based upon the exercise price per warrant of $11.50 per share. So that's the exercise price per warrant, which I'm going to get into. So we have an exercise price of $11.50 per share for Romeo Power, and it's usually $11.50. So this warrant will entitle the holder to purchase one stock at an exercise price of $11.50 per share. So by buying this warrant, this gives you the right as an investor to buy the stock at $11.50 per share. And I'm sure you can see what's coming. So if the stock price is higher than $11.50 per share and you've bought it for $11.50, then of course you can make profit in that discrepancy. But you also need to take into account the warrant price. If you bought 100 warrants, then this gives you the opportunity to buy 100 shares at the strike price of $11.50. But then you've also got to take into account the price of the actual warrant itself. And what you guys need to do is calculate your cost basis when purchasing this warrant, and this is your redeemable value. So to do that, you take the price of the warrant plus $11.50. So for example, if I type in the share price for the Romeo Power SPAC warrant, which is RMO.WS, the price of that warrant is $3.51. So to find my cost basis, I take the $3.51 and I add that to the $11.50. And that gives me a total of $15. So that's my cost basis. And basically what I'm looking for is when the share price is over $15, that can be a potential opportunity for arbitrage, which arbitrage is basically buying one thing and then selling the same thing at a higher price. So basically, when this is at a premium, so when the redeemable value is greater than the share price. So for example, if this is $15 and the share price is $12, then obviously it's not going to be good for me to exercise this warrant right now because I'd be losing money then. However, when this is a discount, so when this is $15, this total cost basis for the warrant and the redeemable price, which is $11.50. So when this is $15 and the share price of the stock is, let's say, $18 or $20, then that $3 extra or that $5 extra, that's your potential profit. However, you can only usually redeem that warrant during the redeemable period, which is usually 30 days after merger. So you need to check when the warrants become exercisable. So this is usually 30 days after the merger, and this can be confirmed by checking the S1 filing. So this slide's quite important here. You might want to pause the video, read it, if you want to know a bit more information. So here's a simple example with Hyliion pre-merger. So this was pre-merger when Hyliion was Tortoise Acquisition Corp. So back then it reached $55.85 on its normal share price. The warrant symbol was SHLL-WT. So this was the warrant symbol for Hyliion, and they were $25 at that point. Thus, the redeemable price or cost basis would be the price of the warrant, which is $25, plus this $11.50. This gives us a total cost basis of $36.50. So this is basically a discount, as we can see here, over the share price. So we can pay for the warrants, we can pay $25 for the warrants plus $11.50, and this will give us a total cost basis of $36.50. And the share price is $55. So now, as you can see, if we take $55 and we minus that from $36.50, then our arbitrage profit potential is $18.50. So that's our profit potential if we purchase the warrant at that point. So that's a simple example of where you can make a profit on this. So there's a couple of scenarios which we can use to actually trade warrants, and this depends upon your personal situation and investing style or trading style. So let's say if we go back to when Hyliion was $55 per share here, and we calculated our redeemable price was $36.50. Then instead of actually buying the actual outright share at $55, we could just buy it at a discount for $36.50. And if you've got faith in the long-term share price of the company, then you are getting the stock at that discount. However, just beware, anything can happen with the merger in the market. And as we get close to the date where the warrants become exercisable, which is usually 30 days after the merger, then this price discrepancy between the redemption cost and the share price actually shrinks. And that's what we need to watch out for. So really, we're looking for the share price to be up here and our redemption cost, our cost basis to be down here. And this gap here, that's our profit for arbitrage. So here's an example with Pershing Square Tontine Holdings, Bill Ackman SPAC, which Seth Klarman actually bought warrants in. So as you can see here in the S1 filing, if you search for exercise period of warrants, you'll see it says here 30 days after completion. So that's what we need to be looking for. So this is 30 days after completion of the merger. That's when these warrants can be exercised, which basically means you can exchange them for a common share. And if the common share is at a higher price, that difference is what you make in profit. How long do warrants last for? Well, theoretically, they can last for many years. However, in reality, many SPAC companies have what's called a redemption clause. So basically, most SPACs add a clause in which they can force redemption if the share trades above X price, which is usually around $18 for 20 out of 30 of the past trading days. So you need to watch out for these warrant redemptions. This is common, it's in almost every SPAC I've looked at. So this is a standard clause, and the company that issued the warrants and issued the stocks reserves the right to actually say, okay, if you don't exercise those warrants by this certain time, and they usually give you around 30 days notice, then they effectively become worth nothing or a penny. So here's a simple example of a warrant redemption clause with a simple example of buying a car. So let's say you wish to buy Bob's car for $40,000, but you don't want to buy Bob's car right now. You say, I want to buy it in a few months' time. So Bob says, okay, we'll have a verbal contract where basically I will let you buy this in a few months' time when you have the money. However, I reserve the right, if I get another offer, to actually contact you and say, you either buy now or I'm going to sell it to somebody else. So this call that you get from the seller of the vehicle is similar to a call redemption from the company. It's basically a simple example you can use. Now, all this that I've gone through so far, I'm not expecting this to actually sink in your mind straight away and for you guys to get it just like that. It's something that you're going to have to read up on a lot and research a lot and do your homework on if this is something you're interested in. But if this is just for curiosity, then at least you should learn something in this video. So here's an example with Romeo Power again. So they recently announced redemption of their public warrants, and they said basically by March the 18th, 2021, you must redeem your warrants. So if you have warrants in Romeo Power, by that date you must exchange them for stock. And they have some terms. So Romeo Power is entitled to redeem all of such outstanding public warrants if the last sales price of the common stock is at least $18 per share on each of the 20 trading days within a 30-day trading period. So basically, if you don't redeem it by March 18th, 2021, when this company has announced, then the warrants become effectively worth nothing. Well, they're worth 1 cent or 1 penny. So that's what you need to be aware of with warrants. It's a major risk. So if you don't exercise them before the date, then you do lose them. So this is not really something which you can invest into and ignore. I know people that have actually lost money on warrants because they bought them and just forgot about them for many, many months. Now, the companies will contact you and they'll give you 30 days notice when they announce a redemption period, but it's just something you guys need to be aware of. So these are the risks with buying warrants. The first risk is, of course, if the stock price doesn't rise, of the SPAC company, of the merger company. I know most SPACs seem to go up these days, but there's no law written which says they have to. So if the share prices don't rise and our cost is here and the share prices don't rise or they actually fall, then actually we're going to lose money or we won't make any money at all. So the second risk is if the merger doesn't happen. So this is also a risk with investing into the SPAC common shares also. But the difference with investing into the warrants is you've got no floor. So when you tend to invest into the common shares of a SPAC, they usually have a $10 floor, which is equal to the amount of cash in the acquisition company. So here's an example. So if you buy a SPAC stock at $12 and the stock merger doesn't go through, you can lose 16.6% because it'll usually drop back down to that $10 level. And then the merger company, the acquisition company, will have up to 2 years to find another target. However, if you purchase stock warrants, then you could lose your entire value of these warrants if the merger doesn't happen. Be aware of that. And the third risk is the share price will often decrease after the merger as we get closer to the exercisable date for these warrants. So that's something to watch out for. It's even something to watch out for if you're investing into the common stock, because as this date gets closer, people will start redeeming their warrants. And thus the stock price are governed in the short term by supply and demand. If we have an increase in supply of stock, then we will see a decrease in the share price as we have more warrants which are being converted into standard stocks. Now I'm breaking this down really simply, guys. It is quite complicated and it's not for everyone. So with the Nicholas SPAC, the reason that the discount was there was that there were enough warrants out there, and that once the warrants were exercisable, it dramatically increased the number of shares that were outstanding. And what happened was it put pressure on the stock, and this resulted in dilution and caught the common share price. So what seemed like arbitrage wasn't in fact arbitrage at all. So that is something you guys need to watch out for. So a quick summary, if you buy a warrant in a SPAC, this basically gives you the holder the right, but not the obligation, to purchase a company stock at a specific price, which is usually around $11.50. And then you need to add the actual price of the warrant to your total cost basis. And then you need to compare that with the share price. And that difference is the potential arbitrage opportunity for profit. But you also need to read all the terms, know the expiry date, and know exactly what's going to happen with that stock. So it is quite complicated. It's quite difficult to get your head around. It's not for everyone, and you don't need this to be successful in the market. But for those interested, feel free to check it out. And also in the VIP group, I'll put this whole presentation in there. I've got around another 25 pages on this of all different examples and strategies for you guys to potentially go through if you're interested in this. And one question you guys might ask me is, which broker do I use for warrants? Because you can't buy these warrants on Robinhood. Generally, you can't buy them on a lot of normal trading apps. So really you need a specialist broker. I've got an example here. So an example broker which does allow warrants and options, because a few people have asked me about this, is Interactive Brokers. So they were rated the best broker for international trading, best for day trading, and best for low margin rates. They have a wide array of asset classes. So they have an Interactive Broker Lite version, which basically is unlimited free trades on US listed stocks. And then they have a Pro version, which does have small charges if you're doing option trading. So I'll leave a referral link in the description below, which does help to support the channel and support content like this on the channel for free. But that's today's video, guys. If you did find any value at all, feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. Comment below your thoughts. Have you purchased warrants before? Have you purchased options? What do you think about this style of investing or trading in the market? I'd love to hear your thoughts. And with that being said, thank you guys so much for watching. I hope you guys have an incredible day, and I'll see you in my next video. Invest safe.